If you're like me and spend time watching crypto markets, Gemini Predictions gives you a way to trade on volatility. You can take positions on major crypto contracts directly in the Gemini app, whether markets are reacting to macro news, Fed announcements, or major market moving events. What I like is that instead of just watching price action unfold in real time, you can trade on where you think the market moves next with contracts across Bitcoin, Ethereum, XRP, Solana, and more, plus 5-minute, 15-minute, daily, weekly, and monthly durations. You can trade the time frame and market that fits your strategy. The platform is fast, intuitive, and easy to use. With new markets available every day, head to gemini.com/predictions to get started. Make 2026 the year you launch your business, the year you transform into an entrepreneur, founder, boss. One powerful move puts your future firmly in your hands, starting a business with Shopify. If you've got an idea you can't shake or a store you've already designed in your head, with Shopify, 2026 is when you can finally make it happen. Shopify gives you everything you need to sell online and in person. Billions of entrepreneurs have already made this leap, from household names like Gymshark to first-time businesses like Watch This. Shopify gives you all the tools to easily build your dream store. Choose from hundreds of beautiful templates that you can customize to match your brand. The setup is fast with Shopify's built-in AI tools that write product descriptions and headlines and help you edit product photos. Marketing is built in too. Create email and social campaigns that reach customers wherever they scroll. As you grow, Shopify grows with you. Handle more orders, expand to new markets, and do it all from the same dashboard. In 2026, stop waiting and start selling with Shopify. Sign up for your $1 per month trial and start selling today at shopify.com/DCR. Go to shopify.com/DCR. That's shopify.com/DCR. Hear your first this year with Shopify. It's 8 a.m. Eastern, June 8th, and this is your daily crypto report. Bitcoin is up slightly at $63,310. Ethereum is up 0.5% at $1,687. BNB is up slightly at $597. Strategy bought another 1,550 Bitcoin for about $101 million, bringing its total holdings to 845,256 BTC, worth about $53 billion, but acquired for roughly $64 billion, including fees, implying about $10 billion in paper losses at current prices. The purchase was funded through at-the-market sales of MSTR shares, with Strategy selling 1.4 million shares for about $181 million last week and still having nearly $26 billion of MSTR issuance capacity left, alongside expanded preferred stock programs. The buy comes right after Strategy disclosed its first Bitcoin sale since 2022, selling 32 BTC for about $2.5 million to help fund STRC dividends, a move JP Morgan said spooked the market despite being symbolic and voluntary. Well, the UK FCA is proposing to let authorized investment funds put up to 10% of their assets into crypto ETNs for the first time, filling a gap left after retail investors regained direct access to crypto ETNs in 2025. Professional-only qualified investor schemes would have no cap, while long-term asset funds and some alternative non-UCITS retail funds would remain excluded because the FCA does not see crypto as fitting their investment objectives. The Investment Association backed the move, calling it a practical way to give investors crypto exposure through regulated listed products rather than less transparent alternatives. Eligible crypto ETNs would need to trade on UK-recognized exchanges or qualifying EU and global markets, and fund managers would have to show the exposure fits the fund's stated objectives and risk profile, with meaningful allocations disclosed as a material strategy feature. The FCA is still not considering direct crypto holdings inside authorized funds and says it will review that stance after the UK's broader crypto regulatory regime, including custody and safeguarding rules, becomes clearer. Well, Bernstein says Bitcoin's boring cycle and weaker retail momentum do not weaken its long-term store of value case, even as spot Bitcoin ETFs have seen over $2 billion in net outflows so far in 2026. The firm said total Bitcoin inflows from ETFs and treasury companies are around $12 billion this year, down from roughly $60 billion in 2025, meaning corporate treasuries are doing most of the heavy lifting as ETF demand cools. Bernstein also pointed to Glassnode data showing 61% of Bitcoin supply has been inactive for more than a year. The firm sees Bitcoin's quieter, more institutionally distributed ownership base as supportive of the long-term store of value thesis, while fresh crypto capital is increasingly moving toward digital asset infrastructure and real-world asset tokenization platforms. Well, U.S. spot Bitcoin ETFs saw $1.7 billion in net outflows last week, their biggest weekly pullback since February 2025, extending a rough stretch after $2.4 billion in net outflows during May. BlackRock's IBT took the biggest hit, seeing its largest weekly outflow since launching in January 2024. The selling pressure was steady across the week, except for a tiny $3 million net inflow on Thursday. Geopolitical uncertainty added to the risk-off mood, hitting not just crypto, but also AI, tech stocks, and gold. And finally, a New York Supreme Court judge has paused a lawsuit attempting to claim ownership of over 39,000 dormant Bitcoin wallets, blocking any move toward default judgment until a July 14th hearing on whether to admit an amicus brief opposing the case. The lawsuit, filed by anonymous plaintiffs, argues that New York's lost and found law should let them claim wallets whose owners did not respond to blockchain notices, but the theory is obviously highly controversial because the statute has never been applied to blockchain assets. Galaxy Research estimated the addresses hold roughly $234 billion at current prices, though the complaint claims each wallet is worth less than $10 because recovery is uncertain. The list reportedly includes some Satoshi-era Potoshi addresses, raising major legal and jurisdictional issues. Attorney Ian Cohen, who filed the proposed amicus brief, argues that public blockchain addresses are not lost physical property, that an algorithmic sweep is data mining rather than finding, and that dormant wallets may simply be securely held or inaccessible, not abandoned. He also says any court declaration would be practically meaningless without private keys and could mislead exchanges or custodians into treating the plaintiffs as rightful owners. The plaintiffs tried to notify wallets, sending about 41,000 messages to wallets holding roughly 2.3 million BTC and treating non-response after 90 days as abandonment. Several named wallets have moved funds since the lawsuit surfaced, including one that transferred 47 BTC and another that moved 35, suggesting at least some supposed dormant owners may still exist. That's all for us today. Visit us at dailycryptoreport.io and listen to us everywhere else you podcast under Daily Crypto Report.
From artificial intelligence to the gig economy to global volatility, the economy is changing at a dizzying pace. Enter the Managing the Future of Work podcast, the chart-topping and critically acclaimed podcast from Harvard Business School, hosted by me, Bill Kerr, and my Managing the Future of Work project co-chair, Joe Fuller. This show explores technology trends, demographic changes, the rise of the care economy, and many other forces transforming the landscape of work. We'll highlight the insights of business leaders, technologists, and experts like Business Roundtable's Kristen Silberg on corporate workforce strategy, and Khan Academy founder Sal Khan on AI, education, and the future of work. With more than 2.5 million downloads and close to 300 episodes, there is something for everyone. Follow HBS Managing the Future of Work on Apple Podcasts, Spotify, or wherever you're listening now.
Have you ever wondered why Reese Witherspoon founded Hello Sunshine, or where Kevin O'Leary got his start, or even how Alex Earle became the most accessible founder to someone who may not even consider this space? Enter The Founder Mindset, a new podcast from Harvard Business School Foundry, hosted by me, Reza Satchu. As a leading educator in entrepreneurship, I've built multiple high-profile companies and mentored thousands of students and founders through the realities of starting and scaling ventures. And with The Founder Mindset, I'm sharing those lessons with you by sitting down with world-class entrepreneurs, including Witherspoon, O'Leary, and Earle, plus Tim Ferriss, and many more, to break down exactly how they commit, decide, and build for impact. These aren't surface-level interviews. Each episode, I challenge my guests to revisit their toughest moments, their boldest decisions, and the mindset that carried them through. Follow The Founder Mindset wherever you get your podcasts.